Minutes of the Monetary Policy Committee's last meeting are out. Lata Venkatesh joins us with all the details on what the panel members had to say while taking the rate decision. Lata, what were the highlights from there?
Okay. Well, actually, there is a lot of commonality of observations. I'll start with the governor's observation since that's more important. Sounds very concerned about inflation. No letting go on that. So don't expect any softness from the RBI anytime soon. Worried about seasonal uppick of food, especially vegetables, non-food, non-fuel inflation, what you call services inflation or core inflation, also seen very sticky. Impact of the 7th Pay Commission and cost push. Input cost prices anyway strengthening, rising, and therefore chances of producers passing on that costs, heightened risk of global turbulence. All these are, and on growth, the governor and the others are less worried. They believe that demonetization was a minor impact, a modest impact. Potential output was not destroyed. Only actual output suffered a knock, and they expect activity to pick up. All of them are expressing concern over investment activity not picking up. But however, the governor sums it up when he says that the outlook of inflation calls for close vigilance with a view to ensuring that the medium-term trajectory is in line with the objective of bringing it down to 4%, sustainably but in a calibrated manner. I think, according to me, only that one word, calibrated, kind of redeems an otherwise hawkish statement. Calibrated would mean they don't want to achieve 4% like, end of this year. Looks like they will at least wait. That's the impression I'm getting. The rest of the, key participants, Viral Acharya, Mr. Michael Patra, Ravindra Dholakia and Pami Dua also expressing similar concerns. Viral Acharya also going on to say that this is a perfect time to look at the other issues like solving the stress in the banking sector, mopping up the liquidity, by which I believe, I would assume, he means that, that standing deposit facility which was discussed to absorb liquidity without too much of a cost for the RBI, and evolving a corporate bond market. So those are the three things that he's discussing outside of monetary policy. Soumya Kanti Ghosh, the Chief Economic Advisor of State Bank of India, is with us. Soumya, is this exactly as the statement made it out to be? Any further hawkishness or dovishness you will take away?
No, I think the statements and the discussion, if whatever I have gathered in the course of the last few minutes, I think they are mostly in line with our observation. But there is a very interesting observation by Dr. Patra. If you look into the last paragraph, he actually is talking about an preemptive 25 basis point increase in the policy rate.
I know.
So I think that is one thing which is a little bit, given the current growth conundrum, growth is still continues to be, even though all of the Monetary Policy Committee members believe that the impact was transitory, and that seems so given that the CSO data which came out last February. So that is one thing which needs to be observed. So there is a divided house, and if you also closely look into the statements by Dr. Dholakia, he actually looks a little more, the most dovish across all of them, because he's talking about an inflation which is to be close to 4% throughout the year. So he's talking about an inflation number in the first half around 4%, second half 4.5%.
4.5%.
Yes. So which is lower than the RBI expectation. So amongst all the members, he seems the most dovish one. And in my sense, I think if I go through this statement, I think there's still a lot of concern about inflation going forward, because now they are also talking about not the pay commission recommendation. They are talking about another impact, the second round, the Dussonbury impact, which I found out, is that spreading to the states. So basically, they believe that this pay commission recommendation, even on GST, they are now believe that there could be an upside to inflation. So GST, pay commission recommendation, crude prices, as per the governor, could go either way, geopolitical risk.
Yes.
So, and of course, the El Nino, which they're talking about, now that fear has receded after the monsoon forecast. So all of these statements make us believe that they are going to be on an extended pause for the next at least for the next couple of policies. Even in my sense, the inflation fears as of now looks a little bit on the looks a little bit exaggerated.
Oh, it does look exaggerated, especially as you point out, Dr. Patra saying that I believe a preemptive 25 basis point increase in policy rate will point us better towards the target of 4% to which the committee is committed. But it will also obviate the need for a backloaded policy action later on when inflation becomes unacceptably high. On balance, however, I vote for holding the policy rate unchanged. To be fair, he is the sole voice talking about hike. But would you say that the majority of the committee is still sounding very concerned about inflation? So even with that elementary softness from Dholakia, who speaks about 4 and 4.5% inflation, this Monetary Policy Committee is going to remain more concerned about inflation, more hawkish rather than dovish?
In fact, if you look into the entire, I think around 10-page document, I find, in each of the paragraphs and under each of the committee members, I find that most of them are committed to discuss on inflation.
Yes.
So growth, if I see, all of them are of the same view that the growth impact has been temporary, but in terms of, there is a concern, of course, on the investment one not picking up, but I see most of the discussion, almost,
yes,
I think 2/3 or 75% of the discussion is centered around inflation.
Absolutely.
So I believe that given the mandate that the central bank in terms of inflation targeting mandate, that seems obvious.
Yes.
And going forward, we could actually, I'm not sure whether we could see the policy action which could go in either direction if I am to go through the minutes of this policy.
Absolutely.
MPC.
It does look like an extended pause, but if you have asked for an inflation targeting central bank and an inflation targeting MPC, this is the kind of minutes you will get.